Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the markets closely associated or impacting the metals. And not to disappoint, those metals continue to remain exciting and active and volatile. And, you know, Rob, you're sitting here nodding and smiling. And when's the last time you had a ride like this?
I mean, baby.
Always just up? You're, as the KG veteran, I don't know if this reminds you of prior periods in your long esteemed career, but we'll get into the weekly numbers here in just a sec.
We've grown accustomed to the metals being flat, watching the grass grow. Every time gold starts a run, you have the one step forward and then another 2 steps back type of action. So it's really hard for old timers like me to get on board and say, we're headed to 3,300. I would dearly like for there to be a reset and have it back down to where we were in December at around 2,600. It's not happening. There's too much.
Rob, you may be older than me, wiser than me, and far better than me, but you may not be more curmudgeon-y than me. I hold the title as most pessimistic curmudgeon gold broker at the office. Do not take that from me.
Oh, yeah? Okay. Well, show us the weekly numbers. We'll see if they match your attitude.
Oh, you're going to love this. I'm going to get to something in here in a minute. You guys are both going to go pull your phones out to try to prove me wrong, but you're not. So here we go. Let's take a look at what gold's doing over the last week. My guess would be most people out there can probably guess how the metals have done here over the last week, because like you were saying, Rob, it's not 2 steps forward, 1 step back. So far it's been 2 steps forward and then 2 steps forward. So we'll see where we go from here.
Exactly
at
right.
least, at least over the last month to 6 weeks. From our recording last Wednesday, so starting on Thursday of last week, we're looking at gold up about 1.25%. So not a significant move, at least week to week, but we did have a high of 29.42, which is going to mark a new all-time high, obviously, this past week. And then we've inched back down to about 29.03. So even on a little bit of a pullback here, we're still up a little over a point for the week, and we're still sitting above 2,900. Now get your phones out, guys, because you're going to want to correct me. Silver is down 0.2% on the week, believe it or not, at least as of the time of this recording. Currently sitting at $32.22. It is down 0.2%. So all in all, silver's actually flat. Now, silver was incredibly volatile this week. We had a swing from the intraday high to low of about 5%. I think it was about $1.60 up and down. So silver was kind of all over the place, but landed right in the middle about where we started. Looking at the other white metals, platinum.
Strong.
Here's a fun discrepancy. Platinum up 2.2%, 1,033, and definitely showing some strength here this week, while palladium, on the other hand, continues its slide down another 3%, down to 985. And if you look at the high right at the end of January, palladium is down 9% in the month of February, so 985 on palladium currently.
After such a great January, we were getting kind of excited about it. But
right.
All of us, I think, would agree we would rather see palladium continue the decline because there's a ratio trade coming when platinum really starts to become dominant in price over the palladium. So not that we're cheering palladium on, but if you own it, sorry, we're not voting against you.
So quick gander at the paper markets. The S&P down about 0.4%, 60.53. That's 6,053 at the time of recording. However, clearly in at least a sideways pause. We've seen a couple lower highs and a couple lower lows. Not anything significant, no real breakout moves to the downside or anything, at least as of right now. For the last couple of weeks, the equities market is trading sideways, kind of figuring out politically, I think, what's going to happen next. And then finally, the dollar up just slightly week to week, but we are sitting right at 108, about 0.16%. That's from our recording last week and a little bit higher interweek. So we are seeing a little bit of dollar strength again here. Now, with that gold up and silver basically flat, the gold-silver ratio hit 92.2 today. That is the highest we've seen since August of 2022 and the fourth highest gold-silver ratio ever. So where we go in silver? What you doing, buddy?
We'll talk to the doctor, Dr. Copper.
Yeah, what's Dr. Copper doing?
You know, the big question is we're back to all-time highs, all-time highs, forever highs. We're going to break $5 maybe. We're around $4.70 right now on copper, and that's right at the top line. So if it breaks $5, silver's going to have a run.
Commodities in general are having a little bit of a run, and unfortunately that's par for the course when you have expectations of growth and inflation.
Yep.
So that's not going to hold week to week in a sense, but
No.
that's where we are right now.
But if we have an expansion, if we can reindustrialize and have the inflation that is definitely coming. Oh, by the way, DOGE is going to audit the Bureau of Labor Statistics. We'll finally get some real numbers coming out of there. Everybody knows that inflation is way underreported from what it costs to put food on the table and gas in the car. So, and of course, they take that out and they'll tell you that, but everything else is going to be higher. So we're headed towards significant inflation, especially if tariffs factor in. So hold on to your hats. There's pain coming. All we've done so far is have light into the dark crevices of the deep state. We're seeing fraud, abuse, unbelievable levels of where taxpayer money is going, but we have not fixed anything yet. And the pain is coming. I wish I could say something different, but I'm very optimistic because it has to happen. You know, we've got to take our medicine to get well.
Yeah, that's exactly right. And the Bureau of Labor Statistics is encouraging in the long run too, just because you need to rebuild trust in all levels of government. But in that one, the markets need that. So they're responding to bad information, bad data. You know, you're talking about major decisions. Even policymakers in Washington are using those numbers. So I don't know what's going to happen when you have the jobs report not even closely corresponding to what had been reported in the past. That's a reality that we could see is anywhere from non-farm payrolls to GDP and CPI, and all these things could really just kind of shift in a major fashion. But as long as they do it in a trustworthy fashion, then we can move forward. It doesn't have to roil the markets necessarily, but it's kind of like the emperor with no clothes. Suddenly you have this reality where people understand now the enormity and severity of what should be the distrust in the government and statistics.
But you made a great point earlier, too, when we brought this up pre-show, that if Trump can get the right numbers out now, it does not reflect on his administration. If they wait until a year from now and the actual numbers from BLS are reported, it does reflect on him. Mm-hmm. So he needs to act quickly to get all the light poured into as many of these shadowy areas as possible so people can see really what he is dealing with.
Yeah, you know, I'm thinking too, the velocity of money has been relatively slow. And I know that, you know, you're often a watcher of money supply and velocity of money.
And Fed
and
balance
if you really,
sheet.
and if you really streamline government efficiency from a payment standpoint and everything else, you could actually ramp up the velocity of money, adding to the inflation issue.
Oh, it will.
Right, but again, very stimulative.
Yeah, very stimulative.
And that's what he wants. But it's important that you do it quickly, do it now, so it reflects on the prior administration or just the current reality that you're not responsible for having taken us there. And nobody, I think, at this point really cares. This is no longer a left-right thing. This isn't blaming or any of that. It is cleaning house and increasing efficiencies, changing operations, and certainly the people that are sweating it right now are those who know that their job is either redundant or unnecessary, or they've been part of corruption or hiding or withholding fund distribution or redistributing funds to areas that it wasn't supposed to be going. So all of this is going to be exposed. And on top of that, in all departments, they're moving with great speed. And we'll see where the central bank lands on some of this. Powell yesterday is doing a dance on
the
what to say,
independence of the Fed.
Yeah. You got the independence of the Fed, and then you've got concerns about the banking system. You've got Scott Bessent The Treasury Secretary talking about monetizing the asset side of the U.S. balance sheet. I mean, that could rock the markets, but that's huge for our market because if you end up monetizing and revaluing gold, it could have a $750 billion boost to the positive on our balance sheet.
Yeah. Well, and if you look at the fact that we have to refinance 75% of our national debt in the next 4 years, okay? 28 trillion of that $36 trillion has to be refinanced. That's a big rock to push uphill. And then you look at the trajectory of the gold price. By 26, 27, we could easily be somewhere between $5,000 and $7,000 gold. And if they monetize the asset side of the U.S. government, that really propels the price of gold and probably silver.
Well, and I've got an underlying concern here too on top of that is because I've said for a long time, you have to do all three things. You have to cut government spending, you have to unwind the Fed balance sheet, and you have to raise interest rates if you actually want to taper back the inflation in the U.S. So you have to do all three of those things. Obviously, the government wasn't willing to do their part in the last administration, but the Fed was, or at least was starting to inch that direction. What I don't want to see happen is those flip, where like the federal government actually does find some overspending somewhere. I listened to the whole Elon Musk in the Oval Office with Trump and his kid wearing a baseball cap last night, which I thought was hilarious. But I'm listening to them talk, and Elon Musk clearly does. I'm not 100% sure that Donald Trump knows what inflation actually is, but I'm certain Elon Musk does after listening to him talk last night. And he brought up the fact that he thinks there could be, if he had to estimate, upwards of $1 trillion of wasteful government spending that could be cut that isn't going to affect the average American negatively. So my big fear here, so I'm going to get curmudgeon-y again, my big paranoia here is like a lot of past administrations that have talked about inflation and gone out and found spending that their particular party disagreed with. They've cut that spending, but then they've just rerouted that money to other things that they like and then spent more on top of it as well. So I'm still apprehensive. You know, it's the same I had with Fed Chairman Jerome Powell when he came in. It's like, I like what you're doing. I'm waiting for the other shoe to drop. And I'm kind of in the same position right now. I like what we're doing. And I think you're dead right, Rob. The idea that they have to get this information out ASAP because it's the leader writing 2 letters to the next guy. Letter 1 says, blame everything on me. And letter 2 says, okay, sit down and write 2 letters. Because you really only get to play that game once. You only get to blame the last guy once. Because eventually it is on your shoulders. So we'll see how this plays out personally. Congress is going to have to approve stuff. Like, this isn't something where all of a sudden we're going to start seeing cuts to the federal government. Like, this could end up going nowhere. They could put all these reports out, they could prove all this stuff, and then nobody does anything with the information. Yeah. So we don't really know where this is going to end up going, but I think that you guys are right about what they're finding out.
That's true. I mean, they've uncovered a lot. We just haven't fixed anything.
No, that's right. You haven't drained the swamp. I mean, for all we know, they could just redirect monies to different swamp creatures, right? I mean, that's what we've dealt with for 100 years. It's been a swamp for a long time. Yeah. And you're right. I mean, the hard fixes and utopian vision would be that there's actually money that's credited back to the taxpayers and we all get a huge refund because of that. They're not going to let go of that money. They'll reduce debt, they'll direct it to other programs, they'll save it, whatever that ends up being, but we're not going to see it.
That's curmudgeon-y.
Well, yeah. I know. Miles set the tone.
You know what they could do is they could cut spending and then just not increase it elsewhere. That is technically an option. Now, they'd be the first administration, I think, really in history that did something like that, where they actually cut government spending and then didn't redirect the money. They just took the lower income. Like, that is possible. That actually is the thing you have to do to lower the inflation rate.
Well, it's the thing you have to do to have a responsible household budget. You know,
yeah.
Also,
I have to.
You're right. But in the meantime, I think just from a portfolio standpoint, what you're seeing is, you know, yes, gold is climbing. Yes, gold is moving from London back to New York. But gold also is moving from west to east, and it has
Right.
been.
It's leaving from
that's
New
a
York.
big
Right.
one.
Yeah.
You know, and so you've got to kind of follow that. But I mean, even ETFs, Europe has seen the largest inflow in ETFs so far in years. Like in 2025, led by Europe, you've got these major inflows in gold ETFs while you still have North American outflows.
Right.
Like we're just not getting it. This
We're
is
not
not
getting
a
it at
Western
all.
investor stamp position. And that follows the second consecutive monthly inflow in Europe, which obviously supported by a higher gold price. But global gold ETFs, like globally, the total assets under management rose to 294 billion US dollars. And those holdings bounced up to like 3,253 tons. And that's unbelievable. And volumes rose 20% in January. And so the demand for gold is there. It's even trickling into the physical aspect of it. And now it's a matter of who's going to control the physical aspect of it. Is it going to be the East, the West? Is it going to be the LBMA, or is it going to be the COMEX and NYMEX? You know,
Well,
this is
hopefully it's the
fascinating.
American citizen. Hopefully
There you go.
the American citizen will wake up and realize our house is on fire. We just didn't see the flames before. We see it now. But I think the momentum of this administration is not going to cut spending and then hold on to the money or pay down the debt. I think they're going to try to push the economy, really gin up the flow of money, the velocity of money. And just with the velocity turning up and the revenue coming in from tariffs, I think they're going to try to speed through, you know, this big wall of debt that is facing us. I think they're planning on just putting the pedal to the metal.
Well, that would be very stimulative again, which
I think that's
you
where we're
drive
going.
revenue. Far better to drive the revenue for the government
Yeah.
in addition to it, right? So that's the other piece, Miles, is go get a pay raise.
A job.
On top of all that. Yeah.
Go get a job. I've got one last thing I did want to throw out there because you guys did bring something up a second ago I do think is worth touching on, and that's the movement of gold into other parts of the world. So the Chinese government has opened and allowed private insurance companies in China to a certain percentage buy in gold bullion as a hedge against other investments onto their investment book.
Yeah, I saw that.
So, and I know Dave McElvaney put the numbers together with ounces and quantities, and we're talking significant tonnage of gold.
Oh, equating to over $25 billion
Yeah.
in physical. Yeah.
And this isn't gold going into, well, it's China. Everything eventually flows into the government's coffers. But this is private institutions within China, if whatever China's version of a private institution is. But these are investment firms and insurance companies that, on top of China's voracious appetite for gold, you're going to see some significant increased ounce purchases through non-government entities into China as well. So there is a mass exodus of physical precious metals leaving the West and heading to Europe and heading to Asia. And I think that explains why in a global market we're seeing gold in Chinese yuan and gold in the US dollar both up the same this year, about 12% from the bottom. So we're seeing a pretty consistent rise in the price of gold internationally right now, but it ain't US buyers doing it.
Nope.
So your very concerning analogy about seeing the flames on the house on fire. I mean, we've all been in this market long enough to know that if you're already seeing flames, you're a little bit too late at that point. You ain't stopping the fire at that point. And we saw the average American dive into the gold market after it had already doubled in 2009. It really is just, what are you doing right now? When everybody else smells something, if you can't smell it, maybe you should ask them why. China smells something. Europe smells something. What do you not smell that they do? So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. We encourage you to swing by our website at McElvaney.com. If you're looking for some additional information, you can also find us on Twitter at ICA Gold or Facebook at McElvaney Financial. As always, if you'd like to discuss your personal portfolio, please give us a call. We can be reached at 1-800-525-9555. 856. Thanks again for listening. We hope you have a great week.